Good morning. It is Monday, November the 7th. Going to run through the morning charts here and see what's unfolded through Friday and pre-market trading today. Taking a look at the chart, we've got a 4-hour chart of the US dollar index, and that is the candlestick charting behind here. And the overlay blue line, that's actually the SP 500 index. You can see how they move more or less inverse to each other. And what we've seen in the last week or so, we've seen a nice surge up in the US dollar index. We're seeing it more or less flag sideways. It looks as though it's trying to form a nice bull flag here, and then it could end up going quite a bit higher, especially if there's some more issues in Europe. And of course, we'll probably see the euro collapse and the US dollar index rally. So with the strong move up in the US dollar index, we've broken a previous pivot high. We've also broken a couple other previous pivot highs here. And the fact that we've had that nice strong move to the upside and a nice kind of flag tapering down indicates we should see higher prices in the US dollar index. So with any luck, we'll probably see the US dollar index shoot up to the 78.50, the 79 level. It could go higher, but that's more of a conservative kind of target. And of course, if we see the US dollar move up here in the next week, then we'll see this this blue line, which is the equities market, likely sell off and move to the downside. Now, looking at the equities market, you can see we've got somewhat of a head and shoulders pattern somewhat forming, and more or less this bear flag could end up just breaking down, and we could see it move sharply to the downside with a strengthening dollar. So that's kind of what we're looking for, and I'm actually kind of leaning towards a bearish position, meaning we're going to short the SP 500, and I'll cover that in the last couple charts of the video here when I get to the SPY and the futures for the SP 500. But overall, the US dollar index has been strengthening over the past couple trading sessions. Had a little jump up this morning, came right back down, but overall it's still trading in a nice bullish pattern, and we'll just see how this is going to play out. But overall, there's been a little bit of strength in the market. And now we're looking over to crude oil, the 4-hour chart. The past couple trading sessions, crude oil has actually been also holding up. It is looking a little tired. It's kind of lofty, just kind of hanging out here. It gets stepped on with some selling and then kind of gets bought back up, drops back down with some selling, kind of gets lifted back up. I do feel as though if we see the US dollar rally, we're likely going to see crude oil pull back some more. I feel as though this current price action here isn't that bullish looking. The fact that it's kind of just been working its way up, and it's not really, even though it's broken to a new high here, each time it appears to a new high, we see a spike of selling. So I do feel as though a jump in the dollar is going to trigger some protective stops in crude oil. We'll see it run down, and I say that because let me just pull back, zoom in on this chart a little here. We'll see protective stops being triggered, meaning as we've had a nice strong run up without any real significant pivot lows broken, people, as it gets more and more overbought and we are trading into a pretty major resistance zone up here, what we're going to see now are wherever there's a pivot low on a short-term basis, traders are going to be like, well, if it breaks that level, I'm going to have my long position exited. My protective stop will kick into gear and sell me out of the long crude oil position. So we're going to have protective stops here, here, here. We're going to have protective stops, probably have some somewhere in this area, and then we've got these ones. So if we do see prices start to sell off in crude oil, we're going to see stops hit right here, which will trigger a little wave of selling, which could bring it down even lower. If it breaks this one, it will trigger even more selling, and then if it breaks this one down here, then it would trigger even more. And what it causes is a sharp, more or less waterfall effect in crude oil prices. And depending how sharp it does fall, there's other pivot lows that can add to it, and you could get a pretty significant move down. And there's a potential that it could come back down to the 82, 86 area. There will be some support in here, but that's kind of what I'm looking at right now. The fact that we're not really seeing any kind of bullish patterns in here, rather we're seeing this previous pivot high here. You can see it just pierced it, and then selling stepped in and sold it down, and then it came back up, pierced it by a couple cents, and then we saw some more selling come back in. And this is usually a sign that the market is exhausted and that it's just a matter of time likely before crude oil pulls back and has a nice dip. So taking a look at gold and silver. Gold, with the uncertainty going on in Europe, gold continues to hold its value and continues to grind its way higher. Past couple trading sessions, volume is getting lighter and lighter as the price goes higher, and it's right up into that price target I gave out actually quite a while ago. Pretty much when gold was trading down here, I pointed out we'd be trading in this big range here until we get a breakout of this range, a clear breakout. Then it would probably run to the 1775 area, which is right where we're trading now, which are these previous pivot lows, and the level where gold actually really cleanly broke down and then went into a full out sell-off. So that's where we are trading now, and the thing to note here is volume overall is starting to dry up as we get up into that resistance zone. And if we see the US dollar actually have a jump in price, we'll likely see gold pull back. Now the only catch here is if there's some serious issues, which there are, but depending what kind of headline news comes out of Europe, it will also affect the price of gold. We could see the US dollar rally as the euro kind of collapses. We might actually see gold move up simply because it's the safe haven, so money could start moving into gold and the US dollar together. So we got to be aware of that, but overall gold is now reached its resistance level on declining volume, and the US dollar looks like it's ready to rally. So I wouldn't be surprised if we see gold and silver and equities and probably crude oil pull back this week if we get that kind of move up in the US dollar index. Keep in mind, gold out of all of them is more of a safe haven than anything else, and it might actually hold up really well or might move forward or move higher depending on the type of news that gets triggered this week in Europe. So it might move up with the US dollar. But you got to be cautious. Gold stocks, they could actually get stepped on pretty good if we see the stock market start to sell off. I think gold is the safer play at this time. Looking at silver, here is the silver 4-hour chart. Again, it's a 4-hour chart, and I use the 4-hour because it allows you to see the time span almost of looking at a daily chart. But you get to see all the intraday price action, and you get to zoom back several months. So it's almost like looking at a daily chart, but with much more information. You get to see the pivot highs, the pivot lows, the smaller price action in between there, so you can really see how things unfold, where a daily chart kind of masks a lot of the what's happening through the trading sessions. Overall, silver broke out of its more or less base that it created here, and it dipped back down in there but had a nice bounce about a week and a half ago, and it's just kind of hovering here. Overall, it's still looking, it looks as though it's trying to form a base, but I'm not really convinced. The price action is still bearish. The selling volume is high. It's declining as price kind of goes sideways here. And if the US dollar starts to move up, I got a feeling we're going to see silver pull back down to 32, 31 range, while gold may hold its value. So you'd be very cautious holding silver. Now taking a look at bonds. Bonds are have been a very good safe haven for the last while here, and they've been starting to become very choppy. Looked like they were going to try and break down, but what we ended up having was almost like a fake out. It came to the downside, and then from there we've seen it do a nice impulse move to the upside. Broke a pretty major resistance level, which was right in here, and right now it's forming a nice bull flag, and there was a big gap window from this closing price up into there. So we actually saw price fade back down, pretty much filled that gap, and this pattern is actually showing that we could see bonds continue to move up, could test those previous highs, could even go higher. So there could be a play in bonds actually setting up to the long side now that it looks as though it's shaking the market out with this fake out to the downside. So I'm going to keep my eyes peeled for a possible setup there. Now taking a look at the SP 500 SPY ETF. This is the daily chart. This one is just regular trading hours, so you can kind of see how things have evolved. Overall, I pointed this out a while ago that we had this kind of rising upper band, this broadening formation. And broadening formation is generally bearish, and what I wanted to point out here was simply I'm just going to clear this chart here. We've got this kind of bearish price action starting to form where we've got this shoulder, this head, some strong selling, a gap down, and you can say we got this right hand shoulder. And what I think makes this more of a right hand shoulder than normal is the fact that the way the price has moved up. Generally in an uptrend you'll see price move up, pause for a bit, rally, pause for a bit. You'll see these nice surges to an upside. You get a nice surge, pause, surge, and within it you get a bigger pause and you get a nice move out of it. Overall with this pattern here, what we're seeing is more or less, just clear this chart real quick here. What we're seeing with this is more of a bear flag forming. We had a strong move to the downside and it's starting to more or less trade in this bearish kind of range, which it broke down last week, and it's kind of coming back up and trying to fill this little gap. We had a gap window here, and that's kind of where it started to fade back up to try and fill that gap. But overall this type of price action is more bearish. It should be more of a rounded pattern, or surges up and pauses, up, pause. Instead we're just kind of getting a kind of drift to fill this big gap that we had back here, and then we had a gap down later last week, and the gap down is trying to be filled again. So overall this is a bearish pattern. If you just were to measure that out, we saw a $2, $4, $6, $8 move roughly to the downside. If we were to take that from here, we'd have a $2, $4, $6, $8 move to the downside. So there's good potential that we could see all these stop levels be triggered and see a pretty major flush down in the market down to about the 118 area, which would bring it right down into a pretty major support zone from going way back in time here into these previous tops where it broke out of. And that would likely give us a nice ABC, a three-wave correction, flush the market out, and then from there we could actually see a nice move up now that it will have purged the market. But we'll have to play that by ear. We could see the stock market, depending what the US dollar does, continue to just crash lower and lower and lower. And right now the way this chart looks is I really like the idea of a short position somewhere in here today, because I think there's good potential for a nice breakdown, and we've got all kinds of short-term pivot lows to be broken. So once it starts to sell off, I think we're going to see a pretty good move to the downside, and there's good potential there for a 6 to 15% probably gain, depending on the ETF that we use on the downside. So taking a look at the futures chart, just so you can get a feel for what's happened in last night in pre-market trading this morning. Just zoom in a little bit. So this is last week's price action. This is the 24-hour futures chart. This high volume trading hours are regular trading hours, excuse me. And this morning we saw prices gap higher, and then they sold down this morning, and we've seen them bounce back up just recently. Again, this is a 10-minute chart, so we're seeing zoomed in here. If I was to zoom in a little bit closer, I'll just show you what happened from Friday's to today's. So here we've got Friday's price action. We had a sell down in the morning, and then we had a nice bounce back up in the afternoon, and then we had that light volume kind of more or less, this was the light volume afternoon kind of rise, and out of that we saw a nice buying surge into the close on Friday, closing it fairly strong. Now in pre-market trading, we did get a gap up last night, more or less filled that gap on the chart that I kind of pointed out. If I was just, you can't really see it on this futures chart, but on the SPY ETF there was a gap. I'll just show you where the gap window is. We had a closing here the previous day, and on Friday the market closed right there. So we had this gap from the previous day, and we had Friday's drift back up to the top of to the bottom of the gap window, and usually gaps always get filled. Well, this last night, once the markets opened on Sunday night, we saw the price open up, ran up, filled that gap window, and since then it started to move down. And I really wish this would have happened today during regular trading hours, but almost 90% of the time, the big setups, these kind of gap fills and stuff, a lot of times they happen in overnight trading, where the big guys are involved and they're up all night, and they've got staff in there making sure that all these things kind of get traded. But overall, that gap was filled. Since then, we've seen a huge move to the downside, seen over a 2% move down since last night's high, and we've had a nice recovery, but we're still under a key resistance zone here this morning. Prices tried to hold up, but they gave away this morning, put in a little bit of a double bottom, bounced back up. Selling stepped on it again. It started to drift back up, and this morning, just right into the last half an hour here, we've seen some selling back down. So, going to be looking for a possible short position today in the SPY. Possibly either short the euro or go long the dollar this week. And we may short crude oil, but I'm not sure if we're going to get involved on that or not. And I'm going to be keeping my eye on bonds for a possible long play. So that's kind of where we stand right now. And overall, I think we could see the SP 500, the stocks, take a pretty good tumble in this week possibly. So that's it for now, and I'll talk to you in a bit. Bye-bye.